Hi there, welcome to Kneppy Invest, and welcome to a new series, Grade My Trade. Initially, I was going to call this series Assess My Trade or even Analyze My Trade, but definitely Grade My Trade has a poetic ring to it, and I am a poet, even though I don't know it. Now, the other thing I've done here is color code the word trade. Now, you might notice once I do other videos that I'm going to have a different color for some of these videos. So red looks negative, and red means this was a bad trade. So I am going to grade this particular trade a little bit more negative than some of my other trades. And what I'm going to do in this video series, or in these videos, is I'm going to go through the trades. So I'm going to have a look, sort of like a live view of a chart. Going to go through the charts. Also might include announcements if that is what drove me to take the initial position, and then also talk about why I sold out. And then I'll go through some of the things I've learned. So some of the positive, some of the negatives, some of the things I might have learned, and hopefully I will take away something I've learned from every single trade. I think that's going to be hard to do for every single trade, but definitely for these negative trades, I want to take a lot away from these particular trades, because what's the point in assessing your trades or your investments if you don't learn anything? And then at the end of the video, I'm going to give myself a grade, a letter grade ranging from A, maybe even A plus, all the way down to F. And this particular trade on Acusensus will be falling towards the bottom of that letter or that grade spectrum. Now on to the trade itself, and this is probably the crux of the video. The focus of this particular video and this particular trade is a company called Acusensus. Not my favorite company in the world. I don't really like what they do, and I have reasons behind that. But just because I don't like a company, either financially or what they do, doesn't mean I'm not going to trade it. You can find trading opportunities everywhere. Now, Acusensus hasn't been on the ASX too long. It actually listed back on the 12th of January 2023. So it celebrated its 1-year anniversary about 2 months ago. Now, I do have a rule that I don't buy into IPOs, or I wait at least 6 months or the first lot of results released by the company. Now, the only time I have bought into an IPO is when they have released an upgrade, a profit upgrade, within the first 6 months of their listing. This has happened rarely, but it has happened to me in the past. I can remember 2 times that has happened: Dust Group and IPD Group. And both companies' share price absolutely took off after that profit upgrade. So I am willing to buy into a recent IPO if they release an upgrade, but I typically wait at least 6 months, if not 1 year, to even think about trading IPOs. So this is Acusensus chart for the first 7 months they were on the ASX, and nothing at all happening. On the other side here, I have the announcements, and this will become important later on when I did make a decision to buy some shares in this company as a trade. Now, as we go on through 2023, so this particular chart now finishes about August, we did see the share price pop up in August or late August, September. This could have been around the time the company released their results in August. Share price rallied from about 65 cents up to 90 cents, and then the share price pulled back. And then the share price rallied again to 90 cents. About a week after the initial time it reached 90 cents. So straight away, we know 90 cents has become a bit of a resistance level for the company. Now, as we go through time, the share price pulled back all the way from 90 cents down to 71 cents. And then the share price pulled higher. So around 71, 72 cents was a support level. So we started to see Acusensus trade in a range between 72 cents and 90 cents. And then 90 cents became important in January of 2024. We saw the share price of this company struggle to get above 90 cents, which is understandable. We know back when the share price reached 90 cents and struggled to get above that level in September that this was a resistance level. So it acted as a resistance level. More shares came on supply, less demand for shares in this company because it was at and struggling to get above a resistance level. It's all about demand and supply. You notice also some good volume coming in January. Compared volume in January to October, November, December, as the share price was struggling, not going in any direction. It's a really good sign to see volume starting to increase. I have read in places, in some books, that volume precedes price action. I'm not sure if I totally agree with that, but in this case, we started to see higher volume in January 2024. So that could be a good sign moving forward. I'm going to take this slowly. Whoop, I went a little bit too far. And then on the 9th of February 2024, the share price was struggling to get above 90 cents for about a month and about 1 week. The share price popped up. On that particular day, 9th of January, there was high volume. Highest volume we have seen from this company for quite a while. In fact, maybe the highest volume we have seen from this company since it IPO'd. Yeah, almost since it IPO'd. We did see some high volume spikes in June and April of last year, but that could be just one-off trades, just a cross trade, something like that. So this was a potential breakout. Let's zoom in a little bit more. This was a potential breakout in the share price of this company, and I was paying attention to this breakout. I saw it happen on the 9th of February, and this was a Friday. So really good volume. So a potential breakout. So I would have put this company on my radar at this point in time. And then the next day, the 12th of February 2024, the company released an announcement. Now, you might be a little bit cynical to say the whole reason why the share price broke out on the 9th of February is because someone knew about this news flow the company was going to release the next trading day, one trading day later. The 12th of February, the company released an announcement. Acusensus preferred vendor in US speed contract tender. Now, I saw that announcement, and to be honest with you, it's not the sort of announcement I would get too excited about. In fact, there was some important wording. Preferred vendor means not necessarily, or this contract is not necessarily 100% certain to be followed through with. And this will become important in a second. But on this particular day, the 12th of February, the share price popped up even further on even greater volume. So the share price increased on this day by 8.6% on huge volume. So sentiment had completely shifted to positive in this company. And this was confirmation of a breakout. So all those not willing to buy in when the share price was struggling to get above 90 cents, all those traders were now willing to trade Acusensus because it broke out and the share price went on a beautiful run. There it is, a beautiful run over the next few weeks until the 26th of February. Now, the share price went from 90 cents when it broke out up to a high of $1.16. So it's a nice little 26-cent gain, which is about 30%, 35% gain in a fairly short period of time. Company released their half-year results on the 26th of February, and to be honest with you, not much reaction from the market. So the results either met expectations and the company didn't put any or didn't change guidance, or maybe they even put guidance out. So the release of the company's results did not really hit any sort of trigger with me. Didn't cause me to get excited either way. But then on the 27th of February, the day after that company released their results, the company released another announcement titled Western Europe Tender Outcome. This was a negative in the terms of they didn't lose a contract, they just didn't win a contract. So there is potential when the share price was running up, once it broke out, there was a possibility, one of the reasons why the share price was running harder was the market thought that they were going to win more contracts. Possibly the market thought they were going to win this Western Europe contract, but they didn't. And then the share price took a massive dive. There it is. Massive dive on that particular day, the 27th of February. Share price had dropped 33.33%. I remember that thinking, has the market overreacted? They didn't lose a contract, they just didn't win a contract. This seems like an overreaction. So where the share price closed at 76 cents, and that's a really bearish one-day candlestick, by the way. Share price opened up 95 cents, closed at 76 cents. So a lot of selling during the day. But the one thing I did notice when the share price closed on that day was how close it was to that support level. the bottom of the trading range, which was 72 cents. So just above that. So I actually put this company on my radar for the next day. And then the next day, the share price went all the way down to 71 cents. And that is the trigger for me to take a really short-term position in this company at 71.5 cents. So I bought on that day at 71.5 cents, expecting a bit of a bounce off the support level. Now, this has been a successful trade in the past for me, not only for companies that have released a negative announcement, but just for companies that have hit a very important, strong, maybe not strong is the right word for this case, but an important support level. Perfect example is People In. $1 is a very important support level for People In. And I traded People In back in December, and the share price rallied over 20% in a few days. So it has been a successful trade for me in the past. So my thinking as I entered Acusensus, this is my thesis behind this particular trade. I expected a bounce, a 10 to 15% bounce. I'd be willing to take profits if the share price rallied 10%. So I bought it at 72.5 cents. And I was thinking, this was my thoughts at the time, if the share price rallied to just above 80 cents, I would take profits. And this is where it hurt me. Okay, so then the next day, I took a position on the 28th of February at 72.5 cents. Share price closed at that day at 73 cents. So it actually closed just above when I bought in. Then the next day, on the 29th of February, share price of Acusensus rallied 12.33%. Share price closed on this day at 82 cents. So you might be thinking, well, I took profits. Nope. I did not listen to my whole reason why I took this position. And I became a little bit greedy. I thought, this is a pretty good one-day candlestick. Share price closed at 82 cents. What if the share price rallies even further? Maybe I could eke out 20% in this trade. Then the next day, the share price actually went down. It went down 4.88 cents. Share price actually opened at 84 cents. So my thesis was a little bit right. Share price actually did open a little bit higher. So there was a little bit of positive sentiment in the share price. Share price opened at 84 cents, but then closed at 78 cents. And I thought when the share price closed at 78 cents, I thought, I missed my boat here. Maybe we'll see another rally in the share price. But unfortunately, what happened on the first, and it wasn't the first, it was the 4th of March, because the 1st of March, was it the 1st of March? Yeah, the 1st of March was a Friday. The 4th of March was a Monday. And what happened on the 4th of March? The company released another announcement. United States Work Zone Speed Tender Update. This is in relation to that announcement they released on the 12th of February, which was Acusensus preferred vendor in US speed contract tender. Remember those words, preferred vendor. This particular announcement said, well, we are going to go our separate ways. I forget what they actually said. Let's just look at the announcement. Get rid of this. So they actually said, following discussions regarding the program scope and conditions, a comprehensive program could not be delivered within the tender's constraints. WSDOT, which I think is Washington State Department of Transportation, has closed a tender without making an award to any party. Market didn't like it. I didn't like it. On that particular day, share price sold off. I put in a sell bid, and this was an automatic sell for me. This was an automatic sell. 2 bad announcements within a very short time period. That's not good. Share price on this particular day sold off by 16.7%. Share price closed at 65 cents. But probably the best part of this particular trade is that I did not sell immediately, which was sort of negative because the share price opened at 73 cents. I put in a sell bid at 74 cents, just hoping. Share price opened at 73 cents, but then dived fairly quickly. And I didn't rush to sell my shares straight away. I just waited. I put in a sell at 69.5 cents. And thankfully, my sell bid was hit the next day. Share price actually did increase that day by 6.9%. So we had another bounce. So a lot of times when share price falls a fair bit in one day, share price will bounce the next day. Sometimes you'll see that when the share price of a company rises significantly in one day, share price the next day will fall a fair bit. If it doesn't fall a fair bit, that's actually usually positive. And if the share price didn't bounce in this case, that would be fairly negative. So I did see the bounce. and I sold out of my position at 69.5 cents. The next day after I sold out, the share price actually rallied to 73 cents, but then pulled back fairly quickly. Now, another part of this trade and grading this trade is how well or how badly has the share price done since I sold out. So I bought at 72.5 cents, sold out at 69.5 cents, and the share price has fallen since then. And currently, the share price of Acusensus is 63.5 cents, which is lower than what happened on the day they released that negative announcement, and lower than the day I sold shares in. So, in that regard, this was actually a good trade that I got out at a price I wanted to get out of. I would have preferred 73 cents because it would have been a slight profit, but I'm okay with selling at a small loss. But this could have been a really successful trade if I sold out at my original, sold out based off my original intentions, selling at a 10% profit when the share price got above 80 cents. But I became a little bit too greedy. Now, if you look at the 5-minute chart, we can actually see, in fact, I'm just going to make this a little bit larger. In fact, I'm just going to turn these around. There we go. Turn this around. There we go. I didn't sell there. No, I sold right there. There we go. No, it wasn't there. It was right there. So I would have sold, yeah, around about in the middle of Tuesday, the 5th of March. So this trade only took about a week. Actually, the buy was really good. So the share price hit that support level and bounced almost immediately. So I did have a buy position, a buy bid in at 72.5 cents, and that bid was hit, and then we saw the good bounce. Now, the bounce didn't happen until about, in fact, the bounce happened until the next day, the Thursday, 29th of February, and it was a really good bounce, and that bounce continued into trading the following day as well. So there are things to like about this particular trade, things to not like. So some positives, some negatives. So let's talk about that right now. A couple of positives, and I actually didn't mention one of the positives here. My initial thesis really played out absolutely spectacularly. I expected a bounce off the support level at around 72 cents, and it happened. It was a really good bounce. It was about a 15% bounce from 72 cents up to 84 cents. And the main reason this is a negative trade is because I did become a little bit greedy, and I just completely ignored the whole reason why I took that initial position. I just thought maybe I could eke out a little bit more in this trade. So even though the trade went exactly how I thought it would go, we had that bounce, I became a little bit too greedy. And I think in these sort of setups, these sort of trades, you can't be too greedy. You really have to follow your rules, because these are sort of high risk trades, because sometimes the bounces don't happen, and just trading off an expected bounce can go pear-shaped because you are trading off the back of a negative announcement. And sometimes, as Acusensus just showed us and the market, the negative announcements can come quite rapidly, one after the other. So Acusensus released 2 negative announcements in about 1 a week. So don't become too greedy. That is the main thing I have learned from these types of trades. I have been successful in the past, these types of trades. In those cases, I was not greedy. I took profits when the share price increased between 10 and 20%. Sometimes the share price kept on going, but I was happy to take those profits because that is what I was looking for. The other thing is, sometimes in these sort of trades, particularly if a company releases a negative announcement, it's completely out of your control. You can't get into a time machine and see when a company is going to release some negative news. So that negative news they released on whatever date that was, 4th of March, whatever it was, that was out of my control. I had no idea they were going to release that. So just keeping that in the back of your mind, you don't know the future. And sometimes the company releases something that can blow your trade completely out of the water. So let's grade my trade. Maybe I'm being a little bit harsh because there were some positive things. The initial trade, or the initial reasons behind taking a position, were valid. We saw that bounce, and my selling philosophy played out pretty well. I wanted to get out. but I was a little bit patient. I didn't sell on market on that day. I was a little bit patient and I waited one day before I got a price I was happy with, 69.5 cents. And the very fact the share price is now down 10% from when I sold, I think means my selling was pretty good in this particular trade. But just because I was just too greedy, this particular trade gets a D minus. And the reason I am being harsh on myself is because I want to learn. Don't be too greedy in these types of trades. So, how would you grade this trade? Am I being a little bit too harsh on myself? Or maybe not harsh enough? Maybe this deserves an F grade. So, I hope you've enjoyed this first premiere video in this particular series, Grade My Trade. I've already planned the next video, and there's a reason why I'm doing this particular video on Atlas Pearls, because Grade My Trade, well, the trade bit will be shaded in green or colored in green because that was a fairly successful trade, and more than likely the grade on that particular trade would be no lower than a B plus. So wait out for that video. I should release that in 5 to 7 days. I'm really looking forward to talking about that successful trade after this, I won't say disaster, but this negative trade. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.